Hello everyone, welcome to the Ichimoku Charts.com daily analysis for the S&P 500 for Monday, May 13th, 2013. Well, a continuation of the trend to the upside today, a candle that's made a higher high and a higher low, and once again making all-time highs with the high being at 1636. A small white body candle, so some suggestion that the buyers have lost some upside momentum, and the size of the body of the candle is significantly smaller than the body of the previous day's candle, another white body candle, and that suggests that the buyers have made a much smaller amount of net bullish progress on the day between the open and the close, and that does set the market up for a potential change of trend. And this is similar in a way to a hanging man type pattern, although the hanging man doesn't have the shadow on the top. It can have a very small shadow, but it's a similar type of candle, so there is a possibility of a change of trend. The only problem here is that the buyers have actually closed with control of this market. They've closed up towards the high, certainly a fair way away from the midpoint level, so very good, strong control. And they've shown some good, strong commitment. And if we look at the large shadow on the bottom of the body of the candle, it represents very strong upside price rejection, so the buyers have come back into this market strongly throughout the trading day to close the market with control. So this does suggest there is a possibility of a change of trend, but the worrying factor here, and the reason why it is a potential reversal pattern, is not a perfect reversal pattern too, by the way, but it's because of the small body compared to the relative size of relative to the size of the previous white body. So we will be looking for a potential lower high and lower low. Now, in terms of our Fibonacci extension, and here we're examining the relationship of the first time frame uptrend to the previous time the market is trending up, and here once again for the 4th day in a row the market has failed to close above the 261.8% level. This does suggest that there is a possibility for a change of trend, and if we look at these four candles, the grouping of them, and the way that the highs really aren't making any significant progress, does suggest that we are forming a bit of a congestion area, and we will be waiting for a possible breakout to the upside above this 261.8% and a close up above there, or a breakout to the downside down below this 1622 level. But this 261.8% is held quite strongly. If we see strong bullish activity up above there, then the next target is up at 423.6. But based on this and the fact that we have this small white body candle and the loss of upside momentum in net terms, then we should be especially careful in looking for a potential lower high and lower low. In terms of the Fibonacci Retracement, however, slightly different scenario here, and here we saw the market break out in a strongly bullish manner above the 100%, so we're in an expansive mode of that. We've traded through the 261.8% in a strongly bullish manner, and that level has now held as support for this market. So our next target here is the 423.6% level up at 1650. So quite a different scenario here, but still with the buyers not finding that sustained momentum, it does suggest possibility of a change of trend, not based on this Fibonacci technique, but looking at where the market has closed within the range, it has seen the buyers close with control, and that does suggest that there is a possibility of the market trading up to this 1650 level. Now, in terms of Ichimoku, obviously a bullish market in all three timeframes. The market's trading up above the cloud, so we have a positive bias in the long-term time frame. The market's also trading above the Kijun-sen, so bullish in the medium-term time frame. That's the pink line there, and trading up above the Tenkan-sen, the green line, so bullish in the fast-term time frame. And the Chikou span is above the corresponding price action, so it's confirming the bullishness that we're seeing in all three time frames. Just looking at this market, we are trading a long way up above the cloud, so the market is looking a little bit overextended. It wouldn't surprise to see the market come off to a degree, and if we look at the angle of both the Kijun-sen and the Tenkan-sen, they are pointing sideways a bit, and that's reflecting this little bit of congestion that we are seeing at the moment, and the market really not making any significant progress above these highs. So we have a congestion area here in line with the cloud and the higher time frame trend and the trend in the medium and fast term time frame. we will be looking for a breakout up above the 1636 level and the potential for the market to trade up to that 1650 Fibonacci target. But we certainly should be watching support down around this 1623 area where we saw the market being rejected from previously. If we do see the market close down below there in a bearish manner, then there is a possibility of the market testing back down towards the Tenkan Sen down around the 1608 level. And if we do trade down below there, the 1600 level round number will provide very, very solid support for this market. But overall, we have a market that's trending up in all three time frames. The market is taking a bit of a rest. We still have the buyers showing some control, a bit of a loss of momentum in net terms. So we will be looking for a breakout either to the upside or for a test down to the 1623 level and possibly below. But more likely the market will be trading up to the upside, but look for a potential reversal.